Hello, welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Tjornehoj. For the week ended October 15th, 2014, the conventional mutual funds industry saw fairly flat flows with the exclusion of money market funds, which had outflows of over $18 billion this week. Let's take a look at our macro groups and see where the activity was. Starting off the top, equity funds had outflows of about $1.5 billion this week. Taxable bond funds had inflows about $3.3 billion. Municipal debt funds continued on their merry ways with inflows of about $400 million. And again, money market funds had outflows of over $18 billion. Well, it was a wild ride for equity fund investors this week as the Dow saw multiple days with triple-digit losses. In other words, it hasn't been a fun ride the last few weeks. In fact, since mid-September, the losses on the Dow have now got us to the point where we're about flat for the year. In fact, the S&P 500, to use a more broadly watched metric, started the year at about 1,848. It peaked at over 2,000 in mid-September, and as of yesterday, it was about 1,862. So really flat for the year is, for all that effort that we've had to endure. So as we're looking at flows this week for mutual funds, we can see that things weren't so good. Again, about 4.6% in losses this week at the data. The S&P 500, as I mentioned, is pretty flat right now for the year. It also had a terrible week. For flows, we saw mid-cap core funds with the worst losses of about $407 million in losses, in outflows, I should say. International large-cap growth funds were the week's best inflow gainers, with about $581 million flowing to them. Otherwise, not too much to write home about this week for inflows to equity mutual funds. Just not a great week to be in the market. I will notice that the European region mutual funds had one of their worst weeks of outflows ever. It came to about 4.5% of total net assets, as investors are finding no reason to stay involved in Europe right now. Well, turning our attention now to equity ETFs, we got a very different view of the market. Here it looks like inflows, about $4.3 billion coming in. We have a theory that this is done by authorized participants creating shares for their clients to short on the market. The mechanism is not too much more complicated than that, which is why we think that this is probably done to allow them a little more flexibility in their investment choices. Let's when we look at some of the inflows and outflow figures this week with the S&P 500, the SPY taking in about $2.7 billion in air-quoted inflows, we'll say. The IWM, Russell 2000, not far behind, about $2.3 billion in inflows. Select Energy also seem to have inflows of almost $1 billion. Now, oil prices have been on a slide for the past week, and it's hard to imagine investors believing that they're going to touch a bottom anytime soon, which is why we still believe that these inflows are really just new shares created for the purpose of shorting. So while, yes, we can say that they technically had inflows, I think the intent of them was to really vote against the market. Other areas did have outflows, QQQ and other technology-related. We just saw simply outflows this week. Next group to take a look at is taxable bond mutual funds. Again, they had inflows this week, about $3.3 billion. Not quite as good as last week, but again, last week's data was probably clouded with a lot of PIMCO total return inflows. PIMCO is a monthly reporter at Lipper, and since we discuss weekly data, it's likely that all we're going to see are good numbers without any offsetting outflows from PIMCO. So despite a bad week for corporate bond funds with spreads widening. In fact, high-yield bonds saw their spreads widen by almost 60 basis points this past week. Treasuries did manage to rally, and overall we saw inflows despite what might appear to be pretty poor performance for taxable bond funds overall. Core Plus funds led the way, about $1.8 billion. Again, these are analogous to PIMCO's total return bond funds, so likely we're seeing some shifting of assets as advisors move money from one management firm to another. Other players did not see such good news for inflows. High yield and loan funds continued to see assets walk out the door as investors get a little too concerned about those markets. Again, with spreads widening on high yield, that's not a surprise. Next group to take a look at is taxable bond ETFs. They had decent inflows this week, about $1.8 billion. What's noteworthy about this is that they're now at a record high for assets. Over $300 billion is now in taxable bond ETFs. So while they have a long way to go before catching up with their equity brethren, it's, I guess, a good news anyway. Most inflows to them were going towards treasuries like the 7 to 10 year and the 3 to 7 year iShares products. Next group to take a look at is municipal debt funds. They had another good week, putting up over $400 million in inflows. They also had some stellar performance this week, up 71 basis points on average. This was actually their best weekly performance in nearly a year. So a round of applause for municipal debt funds who have come back tremendously this year. High yield muni funds are the place to be right now. They took in about $311 million in net inflows. They've been the source for inflows all year long as investors really like what they see in the muni market, and with decent spreads still to be found in high yield. Why could you say no? The final group to look at is money market funds. Again, outflows this week, about $18.2 billion. I'd imagine some of this was money that had left total return over the last couple of weeks, looking for a new home, finally put to work somewhere else. Again, it's just a place to temporarily park money. Retail only had about $1.6 billion in outflows. Institutions were the bulk of it. They had outflows of $16.7 billion, again substantiating the idea that larger investors were moving money between managers this week. Well, that'll do it for our look at flows into mutual funds and ETFs. Join us next week where we'll have further commentary on what has happened since, or join us online anytime at lipperusfundflows.com for the most up-to-date data. Thanks for watching.